G'day everybody and welcome to another episode of investorTV. Today during this live panel we'll be discussing US dollar dominance, whether that dominance is shifting and the impact that will have on commodity markets, specifically gold and silver. Joining me now to share their perspectives on this is Michael Williams, Chairman and Director of Aftermath Silver Limited, Robert Eckford, CEO of Rua Gold, Sean-Rae Zalewski, CEO of Sidney Resources Corp, and Christopher Ecclestone, mining strategist and principal at Hallgarten and Company. Welcome to the show, guys.
Thanks.
Great to be talking to you all. So yeah, we're talking the dollar dominance and whether that's slipping. So as a bit of a brief introduction, over the past several decades, I've seen, looking back on articles, countless headlines that have warned of the end of the dollar dominance, yet the US dollar continues to anchor global trade, reserves, and financial flows regardless of that. However, rising alternatives are really gaining popularity, especially over the most recent decade, from gold and silver to Bitcoin and other alternate coins. But none yet have replaced the dollar's unmatched liquidity and institutional depth. So, Christopher, what are your thoughts on this? Are the headlines about the dollar dominance slipping real this time, or is it just another case of the same old news being recycled?
Oh, yeah. It reminds me of Oscar Wilde. He said reports of my death are much exaggerated. Because this story, as you say, has been around forever. And the old dog is not dead yet. The problem is that the Chinese would like to see the dollar in eclipse, but then at the same time, they're such control freaks that they don't really want their own currency to replace the dollar. Much as they do things like try to beat people into using the yuan more, they would not like it if it had the type of uncontrol that the US dollar has at the moment. Frankly, the Fed doesn't control it. The US Treasury doesn't control it. It's in the hands of people all over the world who have dollars in their pockets or in their mattresses. And that's a problem. And the Chinese would not like to have that. So we're at a point where, much as many of the others would like to see some sort of rebalancing, it's not happened yet. And we're not at even the tipping point, I'd say, yet.
Absolutely. Yeah, it still feels like there's a way to go, but at the same time, there's just, like you say, there's articles on every single social media website and everything saying that this exact same thing is going to happen. So we'll see where it goes. But basically, what's going to happen during this live panel discussion is we're going to go through the ins and outs of dollar dominance and how that affects kind of commodities in general, as well as the fundamentals affecting kind of the supply-demand dynamics. But first, I just want to get to know all of our panelists a little bit better. So I'm going to ask each of our CEOs about their projects and give them 90 seconds to do this. So if everyone's ready, we'll launch into that. Starting off, Michael, Aftermath Silver Limited is a Vancouver-based exploration company focused on advancing silver-dominant projects in Chile and Peru. Tell us more about Aftermath.
Well, we are silver dominant. Having said that, I think we're one of the largest silver development companies not in production, and that would be based on our Barranquilla project, where we're currently at 140 million ounces of silver, with 100 million of that in measured and indicated, and 39 million in inferred. We're putting out a new resource. Having said that, it looks like we have an equal value of copper, and we have a metal called manganese. And given the current manganese prices for EV batteries, and that's what our project is heading towards, we have the right type of manganese for that particular market. The manganese could prove to dominate the other two metals. It's not because we don't have a lot of the other two. It's just manganese is a short supply, so it's going for $2,500 a ton in the U.S. So that's the direction of the company. We'll have a new mineral resource estimate out, I would say, within 5 days, and then we're going straight to PFS next year.
Fantastic. All right. So it's definitely a polymetallic deposit there, and it'd be good to jump into that manganese market a bit further later on. But shifting now from South America to North America, Sean-Rae, Sidney Resources is a US-based exploration company focused on gold, silver, and rare earth elements in Idaho. What is special about your project?
So what's incredible about our project is both the local and regional engagement with NGOs to get letters of support for what we're doing, which isn't as typical in our region, as well as, as Michael pointed out, our inferred reserve report puts our asset at around, with just one vein, 11 billion in gold and silver. If we incorporate the platinum group metals and the rare earths, that inferred reserve goes to about 39 billion today. So as a defensive strategy, we expanded our claims from that narrow claim set of a 9,000 foot vein to incorporate all 22 known veins in the region. So our footprint has scaled from about 53 acres to 5,000. And as we go forward, we're currently claiming 380 associated claims around us. And one of our neighbors in the area moved in and claimed 4,000 acres to the north of us as well, Thomas Kaplan, who is a behemoth in the space and has done a great job in the commodities market since the 90s. So having him move into the neighborhood is a great sign for what we truly have in the region. We also have a polymetallic ore with everything from gold, silver, through the platinum group metals, iridium, which is a confounding variable often, but also we've seen concentrates of up to 30% in our macro testing, which we recently moved over to Hazen, and then a offtake agreement is being established with a regional player in the rare earth group. So we were able to get to 60% concentration in rare earths with chemicals. However, their facilities only allows gravity, so we can get a little over 30, sometimes 40% with the gravity concentration for our rare earths. And that's going to be a great next step considering the critical minerals needs globally, as well as the U.S. Impact on that as well. So that's a small snapshot of what we're doing, but we are becoming a fairly large player regionally.
Fantastic. Another polymetallic ore body giving some optionality. So hopping now way down south to the southern hemisphere, Robert, Rua Gold holds high-grade gold projects in New Zealand situated in historic mining districts with significant past production. Tell us about them a little bit.
Yeah, New Zealand, as you pointed out, doesn't get a whole lot of attention in the mining space. And so we've got this opportunity, and we started picking up these claims back in 2019. We've essentially got some of the best land in New Zealand that's available. And fortuitously for us, I mean, mining is all about timing and a little bit of luck associated. The government changed out in 2023, and it's probably the most pro-mining government in the world right now. New Zealand is a jurisdiction where you can actually get your mines permitted in 6 months. And that's actually in force in the legislation and an act right now. And so we've got two projects. What we're looking at on the screen now is the Reefton district. It's a past producing mine area. There's current coal mines there right now. And we've picked up the whole district around Reefton. And it's the exact same geology as you see in that Bendigo-Ballarat region. So really nice high-grade gold. The gold medal standard would be Fosterville, obviously, if we can find a Swan Zone. There's also the likes of Southern Cross Gold and their recent success. And the downside really is a Costerfield mine because it's a gold antimony style mineralization. So we've got an area of New Zealand that is known mineralization. We're busy. We've got 3 drill rigs turning now. And then there's huge blue sky upside on our North Island asset. That's adjacent to WKP's Oceana Gold's WKP asset, which has just been permitted under that 6-month regime. So a lot of blue sky in New Zealand, a lot of great geology, and it's never been tapped in the sort of recent history.
Fantastic. Yeah, the kind of developments within the New Zealand mining scene in the last 5 years have been from one extreme to the other, and it's really exciting to see where New Zealand's going to go from here. So during this panel, we're going to be taking questions from the live audience that's viewing this. And so during this time, whenever one pops up and it makes sense, I'm gonna go ahead and ask it. And there seems to be a really good first question that's come out. They've said, regular folks watching what does the end of dollar dominance even really mean? And how would it show up in everyday life? So, Robert, I mean, while I've got you there, did you want to give that one a crack?
Sure. Yeah. I mean, I'm a bit of I'm sitting next to Chris on my screen at least, so I'm nothing compared to him, but I'm a bit of a macroeconomics nerd and a mining nerd. But I mean, the one thing a lot of our generation and generally anyone alive today doesn't realize is that the actual dollar dominance has only been around for 100 years. Before that, it was the pound. Before that, it was going into the the Spanish bullion, and so each 100 to 120 years, there is a big shift of dollar dominance. And to put it into the question asked, what does it look like? It means gold is no longer being quoted in US dollar terms. Oil is not being traded in US dollar terms. Everyone that wants to go out and buy bonds and treasuries from a global perspective, they wouldn't flock straight to the US bonds. And we're already seeing that. I mean, US aren't selling their bonds as freely as they used to be. The T-bills aren't moving. And so you are seeing a move away from people wanting dollars. And that's what it looks like. It's when the global currency, when everyone starts talking about a US dollar commodity price or a base price, it's moving away from that. I mean, we're talking about moving away from the dollar dominance. And I think the elephant in the room is, what the hell do you move to? Because I don't think anyone has that answer. But all we're seeing is in the market is people less attracted to the US dollar as an asset, and moving away from that just changes the way people and central banks all manage their investment funds, essentially.
Absolutely. You mentioned the bonds aren't selling as much, and I was reading recently that even all the way back in 2013, that's when China kind of hit its peak of bond buying, and since then it's just been on its way downward through to now, and it's kind of been almost like a slow burn situation that's going on with the economy. Now, one of the core reasons that the dollar remains dominant is the unmatched liquidity, depth, and rule of law environment in the US markets. So, Sean-Rae, do you see viable alternatives emerging soon? And if so, are we looking at a single competing system or a kind of more of a fragmented multi-commodity system?
So I don't have any crystal ball, just like anybody else. But what I liken it to is whatever the next currency is going to be, it's just the way we count, right? So it's important to various governments, it's important to control, and it's important to the ability to possibly trade freely depending on which systems are used, but it's just how you count. So at the end of the day, London, like as Robert said, the pound sterling was the standard for a long time, but that hasn't stopped London or England from having control throughout the world and its former territories and continuing its banking endeavors, right? It just has to buy a dollar sometimes to do a trade or use that conversion rate for their trade. So that will persist, whether that be a digital currency, which presents its own risks with various security aspects of the currency, or even the digitalization of the euro coming up. And, depending on which scale or schedule they follow, there's going to be risk to that as well, and the security of that creation of the dollar. They're trying to fight fraud by moving to a digital currency, but at the same time, now, if that currency's algorithm gets hacked, or quantum computing becomes more prevalent, or the photon-based computing becomes more prevalent, those security standards need to be changed, or that arms race will continue. So it's not necessarily just about whether it's the dollar. It's about, okay, what do we use next? But it's just a new sandbox, right? So we all have to play in the same sandbox, and whoever can build the best sandcastle with the currency available will be in control, and that's fine. That's how business works. So I don't think at the end of the day it changes how business is done in the long term. People will still work towards resource control and control of trade, and if they can do that, whichever way they count will be the way that it's done. It's not, I think the currency itself isn't that important to me.
Yeah, absolutely. A lot of questions to be answered there. As far as I'd love to meet the person who does have this crystal ball, so I can figure out how to invest properly. Another question that's come up from a attendee is, what kind of signals or indicators do you personally watch to tell if the dollar is really losing ground globally, like FX reserves or central bank buying, or where basically? How about Michael? Did you want to answer that one?
I can try. I watch central bank buying, and I think more for the impact it has on gold than I do the U.S. dollar. I remember in 2008 when we had that big crash, and we all expected gold to go through the roof. It didn't. All the money got repatriated into U.S. dollars, to your point, because of liquidity. I don't know what else there is. I think maybe there will be some fragmentation, but I think for the foreseeable future, the U.S. dollar is going to dominate. The only caveat I would put, unless they can deal with their debt, that is the elephant in the room for the Americans, and hopefully they can. But where else do we go? I don't trust the Chinese. I wouldn't trust the BRIC countries. So there is no other choice in my mind. But I do look to the largely the central banks. I would loathe a digital currency for maybe different reasons. I don't want the government to have any control over our money. So that's where I also see gold going up. People just don't trust governments these days.
Absolutely. And speaking of gold going up, the ECB, or the European Central Bank, has recently basically said that it's overtaken the euro. Christopher, because you're based in London and you're a bit closer to the kind of euro economic zone, what is your thoughts around that? Could the euro be a gold-backed kind of currency in the future?
No. The EU has so many economic problems. We look at the US and we say, oh, no, that looks like a basket case. The EU is a basket case in a different way. Even the German economy is flagging at the moment, and it's long been the motor that dragged the rest along. So it's a pretty difficult scenario for the euro. It just has not got the traction after all these years. Well, it's been 25 years now since it was introduced. It hasn't become the type of currency that many hoped it would be. That this move to a multipolar currency world, where you would have, instead of one dominant currency, 3 or 4. The EU has just not made that leap, except within its own territory and at its fringes. So that is a big problem for it. I just don't see that it's got that backing. And then at the same time, the anemic growth of the EU, and particularly the controls that the Germans have placed upon issuance of new euros, means that the euro base only grows with the growth within the EU. And if it's really low, the growth of the amount of euros in circulation is going to be really sort of tepid. Now, the opposite of that, of course, is the US, which for a long time issued way more dollars than its growth rate would indicate that it should have been issuing. And, a lot of those dollars have been neutralized for a long time, as I've mentioned, in mattresses, hidden in cookie jars all around the world in the form of $100 bills. I had an interesting thought the other day that, basically 10 years ago in the US, most of the US population had never seen a $100 bill, and hardly any of them had seen a $50 bill. You went to Latin America, virtually everyone in the middle class had a stack of $100 bills. Which was a totally weird thing. But in fact, the Latin Americans still have their bunches of US dollars hidden away, as do many Asian countries. And, it's that vast excess of dollars out there that has made the US so strong, because it's effectively been an interest-free loan to the US Treasury by these householders in other countries. But the point we're at now is that these people aren't prepared to hold any more of those dollars than they've held in the past. So, they may have their $10,000 stashed away. They don't want to have $20,000. They don't want to have $30,000. They would diversify that into something else. And whether that something else is gold or shares or crypto or something else or euros, they just don't want to hold excess currency of the US, particularly now that the US itself has cast doubts about its commitment to its own currency. The Trump administration has been more interested in crypto and in liberating crypto than it has been in underpinning the US dollar.
So to follow up on that, there was another question that ties perfectly into that. They've said if someone is trying to protect their savings, instead of stuffing it in the mattress like has previously been done, how should they think about owning gold or silver right now? Is it more like insurance, or do you think there's real upside too, is the question?
Is that question for me? Yeah, I'm happy to answer it.
Yeah.
I've been thinking in recent times, people classically, silver has been called the poor man's gold, but in fact at $50 an ounce, it's become like the middle class's gold, because it's no longer cheap to have a stash of silver. If you want to have a couple of kilos of silver, it's going to cost you real money, not like when it was $7 or $13. And gold has now sort of priced itself out. So it's interesting that in the most recent run-up in silver, we saw a lot of Indians participating. Now, Indians basically for a wedding will buy gold. But, and in the past, they stashed their value within gold. Now they're diversifying into silver, and they may not wear it. They prefer to hide it, put it in their safe deposit box or bury it in their garden. But silver has now become a store of value again, which hasn't been for a very long time.
I think as in addition to that, where to hide is in the commodities themselves, whether that be silver, gold, or platinum, et cetera. 95% of the global money supply has been printed since 2001. So there's been, a 20x increase in the amount of that paper globally. And there hasn't been a 20x increase in commodity prices. So there has to be inflation catch up at some point for those assets. We saw it with wood during COVID and all these other assets where the physical assets are the value. So that's where I shifted my portfolio in 2019 or so, heavily into commodities, away from some AI groups that I was working with and things like that. Still have a lot of that in my portfolio, but at the same time, the physical assets, the structures of control, physical control, still have to exist. Whichever reset this happens with, whether it be through derivative markets, at several quadrillion in value, a small correction in the doomsayer's eyes of the derivative markets crushes currency and will create a reset. But the raw assets, the buildings, et cetera, and the producers will still have to trade in a currency that will reestablish. So there'll be a shuffling of the deck or the banks that are in control. But at the end of the day, the raw assets will still maintain their value.
I think just to add on, I mean, the question, I guess, was this investor wanting to protect their savings. That was sort of the word they used, protect. And I always say, like, there's enough data out there that shows a bar of gold in 1900 would buy you the same house as a bar of gold does today. I mean, it is the true value storage that's out there in the world. So if you're trying to protect your savings, assuming you're protecting it from inflation, because that's what the risk is of holding currency, I still see gold as the number one option there. Silver will be there, but I mean, the holding costs of silver percentage-wise are a lot higher. So if you're trying to protect a savings and sort of hedge against the inflation world, then gold, I think, is over the long term always going to be there. I think if you're trying to invest in gold for the upside of seeing 30, 40% gains year on year, I think that's going to be, and I'm in the gold profession, but I don't think you should be buying gold to expect a 30% gain every year. I mean, that we're in a cycle and it's an upward cycle, but really you're buying gold to protect yourself against devaluation of currency.
Yeah, to follow up on that, Rob, there's another great question that says gold has surged more than 90% since this exact same time 2 years ago. So it has been a crazy bull cycle, and how much longer can that keep going is basically the question. And so, yeah, what are your thoughts on that? Like, it has seen those multiples of basically owning versus stocks, but where will it go from here? Sorry to give you that loaded question, but
no. I mean, again, I'm sitting here with a CEO of a gold exploration company moving into development, and I want to move into development as quick as possible because I want to take advantage of this current cycle. I see these. I'm not as great as some, but I've been in the industry for 20 years and seen a couple of dips and booms. And we're at the start of a boom right now. And I really think another 5 years is pretty conservative of how long this gold run has to go to fix the fiscal issues that the whole world is in government-wide is going to take a long time, and there's going to be a bit of pain, and gold will be the safe haven through that period. And so I think we've got a good runway ahead of us. I do think, like every commodity, it'll go through a cycle, and I think that cycle will come in the next 5-6 years. It'll peak out, and then it'll either stabilize and stagnate for a while. It may even drop again, like it did in 2014. But I do think we're in the early days of a bull run, and so I think there's a lot of upside still to be had, which is why all these groups that we've heard talk today are moving into that study phase. They're looking to move their projects forward, because now's the best time to build to capitalize on the good commodity prices.
Yeah, so you kind of mentioned the supply side more the demand side, but if we now talk about the supply side, like these high prices are, like you're saying, they're bringing on more mines or fast tracking gold projects. So how do you see the physical supply alongside those price spikes? Like, will there be a flood of gold in the next kind of 2 or 3 years as these companies who've gone from explorer to producer come online, or where do you see that side of the thing?
I think a flood's probably a bit exaggerated. There will be new supply coming on, but at the same time, for the last 20 years, we've seen grades of mines on average dwindling to below 1 gram a ton. So as price moves up, lower grades become more economical. I mean, the best way to fix a price is to oversupply something. But gold's in a funny sort of commodity in itself, where you don't go out and like uranium, you don't go and fix contract prices. Every time you produce gold, there's a willing buyer on the other side, and most of it coming from central banks who are very price insensitive. They have a mandate to put X amount of their reserves into gold. They're executing on that, and that's what's driving a big gold price move right now. And so I think that the supply that's going to come on with these new prices is going to be very much offset by dwindling reserves from current gold producers, from end-of-life mines that will continue on at these gold prices where potentially they wouldn't have 2 years ago. But the cost of capital for those guys will go higher, and so it'll naturally equal out. But I don't think there's a worry, because the insatiable demand from the central banks will always mop up that supply.
Absolutely. Now, if we shift the conversation now from gold back towards silver, which is the ballpark that you play in primarily, Michael, together with copper and manganese, as you mentioned, but targeting on silver, it's also discussed as another strategic asset for multiple purposes, one as a monetary asset and two for industrial uses. How do you assess the recent capital flows kind of in and out of the silver market of late?
Well, a lot of the people that play the precious metal will make this comment: when gold runs, silver gallops, and it hasn't caught up to gold. I think the gold-silver ratio is still in the 80s. It needs to come down, I think, into the 50s, and there is precedent for it to even go into the 30s. The interesting thing about silver is 65% is industrial now, largely driven by renewables like the solar side. But still, it's the most conductive metal on the planet. It is strategic because it's used in the aeronautics industry. It's used a lot in the AI industry when you need that conductivity that only silver can provide. The airplanes and the military use a lot of it. We've been in deficit in silver for 5 years. I think one of the things that people look past with silver is it's actually lead zinc, because silver is usually a byproduct of those commodities, and lead zinc prices are starting to move, which means there'll be more production coming on stream to offset some of the deficits. But I think there are some wind in the sales now of silver, so we're just sitting back. We're starting to see it. It's now moved into the 50s, and that seemed to be a psychological barrier. So a lot of people think we'll be in the new year in the 70s or 80s. The leverage that affords companies is staggering. Those of us that can see production on the horizon, it means a lot to the balance sheets at the end of the day.
Absolutely. That's a really interesting point you make about the fact that silver is a byproduct of a lot of other main commodities, I guess. That silver can come with gold deposits, or it can come with lead, zinc deposits, and so on and so forth. And kind of factoring in that side of the supply that will be coming in. There's very few pure silver plays. Do you think there's going to become more pure silver plays as time goes on, or is it kind of too much of a niche commodity?
It's a tough commodity to make economic, and I don't know of too many pure silver plays, quite frankly. Even if you look at Mag Silver, they've got a lot of zinc associated with it. So I think it's just a balance. Unlike gold, it's a lot harder to meet your market cap. It's a tough commodity to make work, and there's a lot of good gold companies, 200-300 out there that I would consider investing in. There's probably only 25 good silver companies if you really analyze it. So when you do have a good silver asset, you tend to hit above your weight class, which is good, and what we're starting to see.
Yeah, I was having an interesting discussion with Don Duret, who is the fellow who's in charge of Gold Stocks Data. You may have heard of him. He was mentioning that he was trying to start a silver miner ETF in the ASX, and he couldn't do it just because there wasn't enough pure play silver miners to meet all of the regulations. So it was an interesting one. But
a lot of people with silver in their name. Whether they are silver miners or silver developers remains to be seen. Yeah. So now shifting more towards kind of investors and digging into where value can be hidden. Christopher, I'll send a question back towards you. This is from one of the viewers. For someone building a portfolio, how should investors think about mixing physical metals producers and junior explorers if they believe the world is moving towards a more currency blocks?
Well, the explorers are a bit like a lottery ticket on the other two, on the producers and the developers. And it's interesting that, for a long time, let's stick with gold. We've seen, gold producers being favored. We're now seeing developers. People are looking past the famous, infamous Lassonde curve, where when you move into the development phase, you get punished before you can emerge like a butterfly in the producer category. I perceive that is not the case now. People are looking forward to the developers becoming producers, so they're not as beaten up as they were before. People have long stayed away from the explorers if they were very much sort of oriented towards, when do we get our gold, or when might we get our gold? Not maybe we'll get some, maybe we won't. I think that the explorers space is looked at by many investors, particularly. Now, people complain about the fact that institutions don't go into these markets. Institutions look at a lot of explorers and see a lot of lifestyle people. You don't really have lifestylers in the producer sector. The people are actually delivering something to their shareholders, whereas in many cases, the explorers are just delivering, promises and news releases. But having said that, people are now sifting through the explorer space and trying to pass the difference between who is real and who is not in the explorer space. And I think very much those that come up with a resource that is either sizable or who have acquired a property that in the past was a producer, I think is a key factor, because there are a lot of explorers who have perpetually pursued green fields, and their properties have remained green fields, and some assets that have been pursued for decades and have never either produced a resource or anything more than that. People are trying to work out who's real and who's not in the explorer space. And that potentially can benefit the explorers who can, more than talk the talk, start to prove that, they are heading in a development direction. Not just, I want another resource. I want another resource. I want another resource. I'm waiting for someone to buy me. Because the big equation in the junior sector is particularly that thinks that they're going to get bought, but in reality, the buyers, who are mid-tier and top-tier companies, are very few in number, and the number of juniors is in hundreds, if not thousands. I think there's something like 1,600 companies on the TSXV and the CSE in that space, and then there are hundreds in Australia in the same space. There's just a mismatch between the potential buyers and the potential prey, let's call it, that most are going to end up not getting a dance partner. And, as it's been mentioned by some of the other people, cycles come and cycles go. You need to be bought within the current cycle by somebody else if your goal is to be bought, or else you will go bust in the slump that follows, because you won't be able to raise money and you will expire. And then somebody else will get your property and it becomes wash and repeat. They'll be positioned for the next boom, and maybe they'll do something more with it than you have done with it. But the secret is to actually work out who's real and who's not. There are quite a few. Actors in the promoting space in West Perth and Vancouver like a duck, but they're not ducks.
You made a very interesting point there, that there's a lot of lifestyle explorers, but there's very few lifestyle developers and producers, and that's a really good way of putting it. I really like that. But you also mentioned another thing, and this I've got to send this one over to Rob, because you mentioned that projects that had past producing mines get a bit of an upper hand as far as a bit of an upper hand. Rob, what do you think of that? Because obviously you've got a past producing over 2 million ounces, I believe. How does that position you kind of as far as moving ahead?
Yeah, no, definitely. I mean, it sort of takes away that, and I'm not a geologist by any means, so I didn't join Rua Gold to drill holes for the next 5 years. I joined because I saw the past producing tenements. It was 2 million ounces at 25 grams a ton, nice high grade gold, and it stopped in the 40s. And so there's a real thesis. It's not like it stopped in the 2000s because it was uneconomic. It stopped in the 40s because they couldn't get the depth that they can today. And so it takes away that discussion of meeting investors, and you're not trying to say, we think there's some gold here, we think there's some antimony kicking around as well. We know that there's a lot of gold left in the ground. It's on us to, our job is to prove it out as quickly, as cheaply as possible. So it's a very different discussion, as Chris mentioned, to a greenfield project where we've got some sort of geo that's been up there. He loves the ground, he loves the structure, he loves the soil samples, but who knows if it's ever going to be economic. We're already that one step ahead, and so the investors that come into it aren't sort of throwing the dice and having as much of a gamble. You've just taken one aspect of the project and you've de-risked it. There's still a whole bunch of other risks, like jurisdiction, like management, and all of those sort of things. But it's on our job as CEOs to try and de-risk each of those pieces.
Absolutely. Now, if we shift that question now over towards Sean-Rae, because you're kind of like slightly ahead in that Lassonde curve from where Rob is. How do you?
We're a very similar site, actually. So we also have over 2 million ounces historically produced. Very similar timeline of it stopping in the mid 30s, and that was due to the federalization of gold and the actions there. So the site itself, we know it's a multi-ounce per ton producer. It's now just dealing with the polymetallic ore while we drift through the vein and then hit those gold pockets that are a little easier. So we will have that free gold aspect, but we also have the polymetallic ore, which they knew, there's reports from the mid 1900s through the 30s and forward about the rare earths being present. And there's a great report, I think it's from 1938, that said they don't know what this is exactly, but they know that in the future it'll be really useful, right? The geologist report at the time knew that these rare earths were too complex to be used for industry today, but in the future they'd be great assets. So we're seeing that, the tailings pile behind me is 250,000 tons of tailings that we just tested that show high levels of rare earths and iridium, et cetera. So huge assets like Rob has as well, where it's really about unlocking that key, or Michael's polymetallic ore of, we're in a porphyry system that is, we're looking at depths of 3,000 feet, possibly, from Dr. Marissa Acosta, that she believes that the floor is here. So our initial reports were at 800 feet, but to Robert's point of drilling deeper and getting more, those veins get wider at depth. So in these systems, and I'm not a geologist either, I just happen to talk to them every week, so I know a little bit more than I used to. It is fascinating to see the complexity of metallurgy and how it works, and working with companies like Hazen and other facilities to not do it completely yourself and lean on their expertise to get to market faster, to benefit during this upcycle. I think is very, very important.
And then another big part that comes into this whole process, and it's become more and more of a important issue as time goes on, it feels like, is kind of the environmental permitting side of things, and that. If maybe we shift this one over towards Michael, how do you face these challenges going forwards to kind of get the permitting done as quickly as possible?
Well, we're in Peru, which, I always say Peru is about social license. It's making sure that the local people are on side. And, I believe in the last 20 years, the model has changed. We used to deal with, the Limas, the Bogotas, Santiago's, the capital cities, essentially, and they would deal with the local people. I think that model has changed. You need to have local people involved from the get-go. What we did there, we brought on a former World Bank development officer named Victor Grande to run our community relations programs. We have 19 subsurface agreements. They're all signed and will be extended through long-term leases. So that's how we've looked at it. You can expect in mining, I think, if you have anything substantive, that you're going to have permitting issues going forward, largely because there's people, largely NGOs, that don't want us to proceed. So the way to deal with these large NGOs that are anti-mining is to have the local communities on side. So that's what we've done. We do everything to World Bank standards. We haven't had any issues to date, knock on wood. And as we go forward, we'll just integrate the local communities more and more into our strategy, as well as the federal governments. You can't do one at the expense of the other. But I think that's the new model, and I'm sure it's the same in other parts of the world.
Absolutely, yeah. The two places I've worked in, Australia and in the Nordics, it feels like it's becoming more and more front and center every day that goes. And yeah, you have to wear multiple hats if you're a geologist. You have to be both the explorer and the community engagement and so on and so forth. So it's an interesting change that the industry is going through. But if we shift things now back from prospect scale and go back towards how this can benefit investors and this de-dollarization. There's been a question come through from Josh Newmont. He said, "Hello, I just wanted to touch the previous question that someone asked as well about central banks. They've been buying a lot of gold, What story are these purchases telling us about the confidence in the current monetary system? And they've even said maybe for you, Christopher. So do you want to take that one away?
Yeah, well, portfolio theory in any space in the investment says you've got to be diversified. And way too many of these banks had way too much parked in US dollars. And unfortunately, the US has not projected an image to these people who run central banks around the world, despite the fact that they're all very lovey-dovey when they all turn up at Davos. They have severe doubts about the commitment of the US government, particularly at the moment, towards any sort of discipline. It's just a free-for-all in the US in terms of debt and expenditure, and with very little commitment towards holding the line. I see that the only way that one can really resolve the enormous debt overhang of the US is actually devaluation, and like severe devaluation. And that would also, severely shake a lot of these people with their $100 bills in the mattress, because their $100 bills wouldn't be able to buy as much. And if you talk to anyone who's been to the US in recent times, they complain about the $15 ice cream in Miami, about the price of a hamburger, about the price of this, that, and the other thing, because the US used to be the land of cheap. And a lot of that cheap was driven by cheap goods coming in from China. Cheap is over. And so the US, if it's not producing the stuff cheaply itself and can't buy it in cheaply itself, is an economy that is, dare I say, it's just like a total old saw that we've been hearing for decades, is living beyond its means. But eventually that comes back to get you, because the US has had unlimited sort of credit provided by all these central banks, and householders around the world have been happy to hold US dollars and earn nothing on them. Now they're not. They want something for something, and they're diversifying. And diversification would take all sorts of forms. Central banks, I have not heard buying crypto yet. Maybe the central bank in El Salvador does, but most others are not. So they need an asset which is either precious metal, which is almost exclusively gold, though it could be silver if they decided to diversify that, but other things like euros, yen, yuan, whatever. And I think that's the way that we're going to be seeing things evolve. It's definitely going to be a multipolar world. And we'll see contracts written, because China, for instance, forced BHP into rewriting 30% of its iron ore supply contracts into yuan. We will see people not demanding 100%, but they'll be demanding that the contracts are written in a currency that actually means something to them. So the Brazilians selling to Japan might be happy to write contracts in yen, which they haven't been happy to do up until now. And all sorts of variants upon that in a multipolar, multi-economic world.
Yeah, that moment was a huge shift, wasn't it? Where BHP was, in a way, forced to go away from. Yeah. And if you can see such a major powerhouse as that kind of being manipulated, it makes me think who's kind of safe from this, and where does it end? So if we now think of the de-dollarization, or when I say that, I mean the devaluation of the US dollar, if that has to happen to really get things back healthy again, one, what does that do to other currencies that are tightly connected to it, like Australian and euro and pound and that, and second, what does that mean for commodities? Does that mean one hell of a super cycle boom, or what's the effects of them really devaluing the dollar?
Well, I think we're already seeing them breaking loose. But I mean, I see gold, precious metals in general, as being driven not just by inflation or monetary factors, but also by security issues. And the surge in gold and silver has paralleled the war in the Ukraine and paralleled the war in the Middle East. The Middle East war is in some vague sort of ceasefire at the moment, and the Ukraine war looks like it's staggering towards its end. At a certain point there, if you have sanctions lifted or sanctions eased, all sorts of things could happen, and gold, I think, would be in for a correction linked to this. I think we saw a brief flurry of that maybe a month ago, but I would not be surprised to see gold shared at $1,000 and silver shared 15.
Okay, so Sean-Rae, I'll send this one over to you. What do you think of that? Is that a buy the dip moment, or is that a brace for longer term pain in the precious metals?
Yeah, excuse me. Even if we lose $1,000 an ounce in the U.S. perspective, the gold is still greatly above where it was, and I think that'd be a momentary dip as well, not a long-term dip, right? So that correction could have a 15-20% pullback, as a normal correction does, and then I think it just restabilizes forward, because you're still behind by, probably 17x of where it should be by the global dollar supply. So if gold has tracked the true inflation of currency over the last 3,000 years per se, then as a stable commodity, then it has a long way to catch up, and that's going to continue. So we'll see these intermittent pullbacks with global conflict, but there'll be a new theater of control, right? The Powell doctrine, Weingart doctrine do not do well with peace in the Middle East, right? At the end of the day, whatever way you want to see it, those doctrines are explicitly written to decentralize power, not from China, but from the Middle East. And that is a constant disruptor there. So I hope for more peace in the world and all those great things, but as a realist, that doesn't continue because of the various military-industrial complexes that seek a conflict to test its toys. And as unfortunate that is, that's a reality. So as that continues, we'll just have a new theater. If Ukraine and Russia can come to some accord, I think it was Peter Zahai notes that Russia is going to continue to find conflict to stabilize its population and control. Otherwise, it will be in 50 years a non-existent regime as it gets impacted by immigration and its population metrics don't substantiate replacement. So there'll be shifts in power there as well. So with all that fear and change in the world, there will be continually a flight to quality of a commodity like gold or silver, whichever one it is, and that will continue. And with population dynamics, that's going to continue to create fear as well. And we have no idea. No one in this room or alive has seen a true population decline and how that affects a portfolio. We've been in growth on both consumption and growth in population globally for a very long time in a rampant capacity. So I think the bigger question isn't how are we counting in 20 years? It's how are we handling production and a shrinking global population in 20 or 30 years. I mean, I believe initial estimates put China's population peak at 2033 initially, and now in revision, that peak looks like it was 2017. And that's been, whether it's Reuters or New York Times or whatever source you want to pick, it's very easy to find. Those are consistent. And that's probably the bigger issue of how do we stay productive and growing in a capacity for quality of life, whether that be, AI or robots or whatever it is to subsidize that. But with aging populations, will China be powerful when 50% of its population isn't working and has now become a quote unquote financial burden to its system? Now, they're going to have that huge crossover faster because of their own policies. And they have very heavy anti-immigration policies that don't subsidize their population as opposed to different populations. So how do they really stay in control when India doesn't have that same issue today? They have other sanitation issues and all kinds of stuff to get into the weeds, but where are the opportunities here? So I think instead of saying, is the correction the big issue? Where's the opportunity for the next 20 years? And I think that is commodities, that is water, right? So as we get into the real commodities that affect life, we like the fear center of I want gold, so I'm taken care of. But if you can't have a population that can develop because they don't have clean water, you're going to have a bigger issue. So I think both of those paths need to be taken.
Yeah, that's a very interesting point you make, as far as that commodities aren't just gold and silver and rare earths and tungsten, and water and food are huge commodities that play into this. And it's a factor that's so easily forgotten, but it's the essential need of all humans. And so that's a great point you make. If we were to look at then water in specifically, like, how was that going to play a role in as far as maintaining power in the future? Like, is it whoever controls the water controls the power, just like in the good old days, like a few hundred years ago, or where do we see that going?
Yeah. I mean, this was a great, plot point in Quantum of Solace if anybody likes Bond movies, but absolutely, we can't have a healthy population without a healthy water supply. And today our water is recycled in every city in the world, multiple times per day. And regionally, every mountain creates, whether it's aquifers, streams, watersheds that are impacted by the work we're doing, right? So we have to do that in a clean capacity with appropriate remediation, and not only taking care of our sites, but the legacy sites that cause those heavy metals and teratogens to be present in water. So we need to be able to remove those with, whether they be electrophoretic systems or whatever it is, that are the best way to engage that carbon chain to reduce its prevalence in the water supply. Because the better our water is, the better the intelligence of our people will be. So if we get these heavy metals and things out of the way, our expression of intelligence for our children will be at a higher range of what's possible. And those problem solvers will help with that next step. So we have to be mindful of those future generations and how we're impacting that. So with our company, we know that our water technologies, our various partnerships with experimental programs for clean water, clean environment, will eventually be stolen by Chinese companies in Western China, Eastern India, whatever it might be for those pieces. And we welcome it. Please steal our technology, do a better job, make a cleaner world. And just like, Tesla says, if you can use our technology and do a better job, do that. Please make the world better, one gold bar, one metal bar at a time, whether it be or heavy metal used in various electronic vehicles. So there's a big shift that I think that, to your earlier point, engaging the local environment that Michael said, local populations, working in collaboration with the NGOs, the tribal governments, the local governments, to get the solutions to what they need. Because we need the heavy metals for all the things in our life. We can't have chipsets, AI data centers, solar panels, and windmills without the things we get from mining, right? At the end of the day, we those cannot exist. But we have to do it in a capacity that respects the world around us, and the technology exists in a capacity that's efficient enough for the capital markets to be happy and the globe to be safe as we grow forward.
If we now take that kind of thought process over to you, Rob, and we discussed it earlier as far as the huge shift in sentiment towards mining from between governments. How exactly, kind of piggybacking off what we said with Sean just then, how did the idea get changed that mining is a good thing because it was a very anti kind of, not regime, I don't want to call it regime, anti-government, and it's changed. How did that get across the line? Like, how did that change happen?
Yeah, I mean, I think the biggest thing that the New Zealand government saw was a lot of their younger working skilled population was all popping over the Tasman to Australia. I mean, Australia's had a mining boom. I started my career over in Perth, and we were surrounded by Kiwis there because they're great workers. And so you lose such a high tax-paying portion of your population. And talking about the aging China issue with their problem in the future, New Zealand was facing that immediately because all the young workers were leaving. And so they were actually in a technical deficit when the new party got in. And so the platform they came in on was very much, let's fix the economy and let's use mining as a vehicle to fix it. And let's change that stigma from the 1940s when there was environmental problems because they used mercury back in the day. And let's refresh it because it is we go to these mining conferences, we have these mining chats and we do these forums and things. but we're all sitting in this silo telling each other how good mining is, and you don't get out there into the world. And what really needs to be done is, and it's done really well. We get the advantage of following on the back of OceanaGold, who've got a big footprint in New Zealand and have done a great job environmentally and community givebacks and things like that. And that's what needs to happen more. And I think the mining industry does it almost better than any other industry, with how much social development they bring to regional areas, whether it be developing world or first world. There's always a give back program. There's always local sponsorships and community involvement and all of that sort of stuff. And I think that's what happened in New Zealand and is still happening. There's still some vocal voices, and the Greens Party come out and say, we're going to essentially put a ban back on mining again when we get in power, which is very unlikely looking at the polls. But you still have a few noisy voices, and it really is an education thing. I mean, I think the more we can educate the generalist on mining and how it can have a positive net environmental impact, I think the better for the whole industry. And just to give a real life example, I mean, Wharekirauponga is OceanaGold's biggest development project. It just got a draft green light decision last month, and it's up in the Hauraki Coromandel region of New Zealand, a beautiful area. And it's an underground mine, so it's light surface footprint, but there's still people against it. I mean, they're going to have a mine going for 20 years, and it's going to have the surface impact of like 4 tennis courts. It's going to, just for the ventilation. So it's going to have this tiny environmental impact on this area, yet there's still picketers saying, no, we don't want this mine there. And even after OceanaGold have come in and said, we're going to do 2,000 hectares of pest control and environmental management on the conservation area. So the net is a huge win for the conservation land. But you're always going to get the picketers. And so we just need to keep working, keep saying, keep having the same strong voice as a mining industry, that we're doing good things for the environment on a net basis.
I agree completely. There's quite a few of those stories, and like you say, mining companies do it better than a lot of other industries, giving back to the community, but they're picked on most out of all of them. So it's a weird kind of parallel. But so in wrapping things up, there's one more question I wanted to ask, and I'll send this one back to Chris to round it out, because it's general but also targeted. If you had to give one simple bit of advice to a new investor trying to prepare for a world where real assets matter more, what would it be?
Real assets. Well, our currency is real assets. I think we've had a discussion here that as it seems to indicate that quite a number of currencies are actually just monopoly money. You can buy a monopoly box and play around with that, but you can't actually spend any of it. I think you have to have a mix of the, the temptation is to buy ETFs of the physical. And then you get totally exposed to the situation today, but you don't get necessarily exposed to the potential of sort of like economic growth of companies. Miners don't just go up because the price of their metal goes up. They go up because they're businesses that are evolving. Now, you can look at some miners and say, that's a sunset miner. They've got 3 years left and they may have 100 million market cap, but in 3 years from now, they can only be worth $20 million, no matter what the gold price does, because their mine is kaput. But it's very difficult for a newbie to do anything more than just say, oh, maybe I should get into gold. I'll buy a gold ETF. And then you look at some of the share ETFs, and they are a bit of a rag bag of sort of over the hill big caps. A lot of big caps have bloated valuations, dare I say it, because of this factor that we mentioned before, where people are bunched into producers, then spilled over a bit into developers, and given 5% of their portfolio to explorers. You're very much exposed to companies that are big, fat, and dumb. And we can name some of the big gold producers out there that are, they're churning away whatever. But when they do M&A, they overpay. They have massive capexes on their projects. Sometimes they don't get them going. I mean, Barrick wrote off $5 billion on Pascua-Lama. That's the type of thing that would keep virtually the whole mid-tier of the mining sector in gold going for years, and yet it was just the write-off of one dud project. So it's quite it's quite dangerous even investing in the top of the space. So you've got to be diversified, I'd say, across everything, whether you're in physical or proxies for mining in the form of share ETFs. Got to be diversified and not have all your money in mining either. Mining comes and mining goes, as we all know.
Yeah, even though we're all from the mining industry, there's obviously other places you can put your money as well. We can't forget about them. Yep. But so yeah, I guess diversification is the baseline that came out of that, and I'm sure all of us agree on that. Now, I wanted to thank everyone today for coming. Rob, Michael, Christopher, and Sean. Had a great discussion. We kind of went through what will happen if the de-dollarization occurs and what can be the ripple-on effects. But one thing that I've felt that I got out of it is that it's going to be positive for this super cycle, even if there is a bit of a correction in between. But extremely interesting discussions, and thank you all for coming on.
Thanks, John.
Appreciate it.